British American Tobacco stock offers passive income investors a dividend yield of 6.29%. Understandably, that robust dividend yield is attracting passive income investors looking to build their passive income over the next few years. So in this video, I wanted to answer and address the question, is this dividend yield safe or is it sustainable for British American Tobacco? Now, to answer this question, I'm going to look at a few important financial metrics, including the dividend payout ratio, the cash flow from operations, and how much debt and cash the company has on hand. So let's jump right in, starting with, of course, the dividend yield we already looked at, 6.29%. But let's look at the payout ratio. And according to this metric, British American Tobacco paid out 56.29% payout ratio. Now, what does that mean? Let me dig a little bit deeper. Payout ratio measures the percentage of earnings a company paid in dividends. So the lower this number is, the more sustainable a dividend is, the more room the dividend has for growth, because a sustainable dividend has to be below 100%. A dividend payout ratio above 100% means you're paying more than what you're earning, you're paying it out in dividends. That's not sustainable. And then if you're close to 100%, that's also risky, because if there is a dip in your earnings, that could work its way to where now your dividends are above 100% during a decline in profitability. So if you're at 56%, that means you've got enough room that even if there were a decline in earnings per share, you were still comfortably below that 100% range. And so this metric suggests that British American Tobacco's dividend is sustainable. But let's look at more details. Let's look at more metrics that could provide more information. So the next thing I wanted to look at is British American Tobacco's cash flow from operations. And according to this metric, the company generated 12.66 billion in cash flow from operations in the recent trailing 12-month period. And that's been moving nicely higher since 2019. While the company's revenue growth prospects do not look strong, of course, fewer and fewer people are smoking cigarettes, the company is able to become more effective in its business and find ways to generate more profits, more cash flow, and that's showing up in its rising cash flow from operations, up to 12.66 billion in the most recent trailing 12 months. And finally, I wanted to look at the company's debt and cash. And remember how I said sometimes when your earnings fall below your dividend, you're paying above 100% of your earnings in dividends? Well, you can sometimes sustain that by borrowing a little bit of money or dipping into your savings to pay out that dividend. And so it provides a bit of a backstop or a bit of a safety net to continue paying dividends even in the event of falling earnings. So I wanted to look at British American Tobacco to see if it has any flexibility to do this if its earnings were to become significantly downgraded. And looking at its debt of 51.58 billion and its cash of 4.64 billion, I would say no, it doesn't have very much room for a backstop here, because it's got so much more debt compared to its cash balance already, and the debt in relation to its cash flow from operations is significant as well, 12.66 billion in cash flow from operations and 51.58 billion in debt. So British American Tobacco, in my opinion, has to rely on its primary source for paying dividends, which is generating earnings per share, generating profitability, which thankfully for investors, it is doing strongly in that regard. It is generating strong earnings per share. So if I was to answer the question, is British American Tobacco's north of 6% dividend yield safe? I would say for now, yes, it is safe, and for the foreseeable future, it is safe. If, however, its earnings were to come under pressure significantly over the next few years, then it could come into question. Then its dividend prospects could come into question. Of course, I will be updating the stock. I will be keeping tabs on British American Tobacco. So if there are any major changes, I will be sure to notify you. But for now, I would say yes, this dividend yield is relatively safe.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.